All right, hello everybody. We are back with another episode. Just
Another abode.
another episode of Finance Junkies. I'm really excited for the mukbang episode tomorrow, guys. You guys are like getting a plate of food ready, right? Because I'm eating.
Yeah, it's gonna be fun. No, it's
I'm
gonna be fun. We gotta get some. We gotta get some grub. I don't know what I'm gonna eat yet. I don't know. I'm gonna order something. I'm probably not gonna cook. Be honest with you.
Yeah, we gotta get the food. Everyone in the chat, they have to get a plate, and we're gonna be talking about just fun stuff. It might not be really that stock focus, but we'll talk about stocks here and there. But
It's a
it'll be a
Junkies giving.
fun episode. It's a Junkies giving. That's perfect. Junkies giving. So today we got a bunch of stuff to talk about. This CZ Binance situation, absolutely incredible. Got to speak about that. Implications for the crypto world. I think VITALY and Carlos can help us understand that. NVDA crushing earnings. Got to talk about that. Do you want to talk a little bit about Palantir? 7% drop today, or 10% drop today. Insiders sold some shares.
You want to start at dumb money? I saw it.
And that's pretty much it.
You want to start with something light?
Okay, how was it? How was the movie?
Dumb money. So,
yeah, let's go ahead.
Have you guys seen The Big Short? Has anyone seen The Big Short?
Good movie. Yeah.
That's an amazing movie.
All of us
Amazing
seen
writing,
it.
amazing directing, amazing acting. The way they explained finance to regular people with like Margot Robbie naked. I'm sure Amit enjoyed that one. But the way they did all those little mini scenes was like so smart, because even if you didn't care about the
Margot Robbie was in The Big Short.
Is that am I using the right name?
No, you're thinking of Wolf of Wall Street.
I think of Wolf of Wall Street.
No, she's naked in it. She's naked in
Wolf of Wall Street, not Big
Oh
Short.
yeah, she's naked in Wolf of Wall Street. Who was it? I think she's in that
Selena
too. She's in The
Gomez
Big
was in-
Short. Hold on, she is in The Big Short.
No, she's
I
not.
think so. No, she's not.
Look it up real quick. Big Short. Margot.
She's
Robbie.
definitely in Wolf of Wall Street. We know that.
Let me just check.
Yeah, you check.
Guys, I have an important
Yeah,
decision.
The Big Short. Margot Robbie in a bubble bath. Is that it? Yeah.
No, that was that wasn't Margot Robbie.
No, that's The Big Short. Yeah.
The Big Short.
I'm right. I'm looking at
It
it
is,
right
right?
now.
Yeah, you're right. Okay, you're right.
Okay,
Guys,
so you
which
totally
one?
threw me off.
Today
In
for
a
tonight,
bathtub. There you go.
Right
So
now,
anyway,
like right now, which one?
ginger and lime. Ginger and lime. Drink that one.
I got to vote for
Jameson.
Ginger Lime. Vitaly, what do you think? Chris, what do you think? And why is your name KRIS? Is that
oh,
your new
the
pronoun?
the rum mojito. That's the one I pick. That's the one I pick.
The rum mojito. Okay, so 1-1. Chris, you're the deciding vote.
You mean curse is the deciding.
KRIS. You spelled your own name wrong.
Yo,
how many
curse.
of you have to drink?
Can he hear us? I don't know if he can hear us.
I don't know if you can hear us.
He's just looking at his Verizon stock. Don't worry about it, guys.
Try the mojito.
He's looking at Verizon is undervalued.
Okay, go ahead.
That's what
Vitaly, go ahead.
Verizon Internet gets you guys.
He's got 5G. Don't worry.
He can't hear shit.
So anyway, my point was like, if you watch that movie, it was so well done. That's what a movie about Wall Street should be, both entertaining and informative. This was a turd. Okay, so Amit, I mean, you probably like it. You like crappy things, but so you might like this movie, Dumb Money. But I felt like the story was subpar, and when they tried to explain what happened, and because we were there, me and Carlos were even covering it. I think you covered some of it. We started during that time when GameStop was like roaring during YouTube, and it was fascinating, and they made it uninteresting, at least in my opinion.
So they took a good story and actually made it garbage.
I mean, I think they really missed an opportunity, and the actors are like A-list actors, and they're just not using them. I really did not like it, and in fact, it makes everyone seem so stupid, because I started actually following a little bit of that. What's his name? The guy who actually did this. His name was Kitty. What is the guy's name?
Roaring Kitty.
Roaring Kitty. That's the YouTube channel he had. So he was up to 48 million or something like that.
Yes.
And his wife did not ever say, you know what, take 5 million out, buddy. Like what? I don't know.
He did not pull an end phase and buy a pool. He did not.
What is he? He's the Dogecoin millionaire.
The thing is, we don't even. He must have sold some, because I think he bought his brother a car, at least in the movie they show. But like, he was still holding and doubled down after it dropped. So I don't know if he ever sold. I assume he did sell something eventually. But I looked at the stock today. If you guys it's fascinating, because the stock was at $400 one day, and now it's at $12. Imagine the people holding that stock who were riding that to the moon at $400, and they were up hundreds of thousands, millions. And now they are at $12. So Chris is like, I'm out of this. Verizon 5G's gone. It went off. So I don't recommend the movie, but Still watch it.
What did you hate about the movie though? What? Because your concern is similar to other people. Other people had horrible reviews for it. What about the movie was just like
the actors are A-list actors?
What is it? Bring up the Rotten Tomatoes for it. I want to see what that.
Yeah, I'll bring it up. Go ahead.
The actors are A-list actors. Everyone you know is in it basically. But the problem is they're not being used as actors. They're being used as like puppets. It's so weird. They're not actually. There's no performance there. The writing is very subpar, and the story's not even interesting. The way it was more interesting on YouTube. In fact, if you just covered the YouTube news and you made that into a movie, that would be more interesting than this movie. So, really, really sad. 85%. That's crazy. I would have thought it's way lower. I would have thought it's way lower. Maybe if somebody else has a different opinion in the comments, let me know. But I really felt Big Short is the way those kinds of movies should be made. And this was like, and the way they explained what's going on, it was so weak. It was just incredibly weak the way they did that.
This film made no money. They made $14 million. That's it. Like,
so who's voting? Bad. Yeah, who's voting on it? Right, the 85% is like the 14.
That's so bad.
That's the point. That's why something like Rotten Tomatoes is not necessarily a good indicator, because if you got like a certain generation of viewers that didn't grow up on movies that we grew up on, they might actually think that's a good movie. It's not that they just might actually think it's a good movie. You know, like, have you ever seen The Godfather, Amit?
Oh, come on.
So if he hasn't. So here's the deal: if you haven't seen The Godfather, then your idea of what a good movie is inherently thrown off, in my opinion. If you've never seen that movie, like he's
never seen Terminator 1. Have you seen Terminator 1?
No, I know the guy. I mean, I'll be back.
Like this is ridiculous. So anyway,
no, but wait, why is Godfather the epicenter of good movie taste?
Well, because because it was, first of all, it was an epic movie with incredible acting, incredible writing, incredible cinematography, incredible editing. Like the 5 things that go together to make a good movie, it hits a 5 on all of them. Like it is
Dawson's Creek doesn't hit all 5, by the way.
Okay, yes, it does. Yes, it does. The season 6 was not the best, but the other 5 are
right.
The other 5 were top notch.
It's a masterpiece on every level.
I figure we start with that. It's a little light fare. So I want people to watch it, and maybe they can comment in the next couple of days if they actually like the movie, because I thought it was horrific.
Yeah, let's see what you guys say. Chris, are you good, bro? Can you hear us?
Yeah, no, I'm good. I'm just no, I'm good. I just needed to make sure my headphones were working, because like
he's so sleepy. His name is wrong.
You wrote
Is it?
You realize that?
Whatever.
Also, turn your volume down, bro. Your mic is hot. Your mic's really hot.
Yeah, give me 1 second.
I've seen Rounders. I saw Rounders, the gambling movie with Matt Damon, I think, right? Fantastic. That was a great movie. That was phenomenal.
That's the pay this man his money.
Yep. I love Rounders. I love poker movies, gambling movies. Go ahead, Chris.
So the thing with Dumb Money is Dumb Money tried too hard to make Ken Griffin and all the short people like too evil. Right? They're like, oh, these guys are just assholes. All they do is they care about just making money off of dumb people. And I'm just like, bro, that's every investor. That's your job, to figure out where people are selling shit that you should be buying, and when you should be selling shit when other people are buying. That's all there is. But they made it out to be like these evil hedge fund people, and it's just the big guys against the little guys. When, to be fair, most short sellers, they've actually uncovered massive amounts of fraud all over the place, whether that be in the crypto markets, whether that be in the Big Short, where you can see the Big Short, that these guys were actually legitimately taking too much risk, the Enron thing. So this week, I mean, you saw Jim Chanos close business. I mean, he kind of like blew himself up after the whole Tesla debacle, but Jim Chanos is also the one that revealed a lot of fraud and malfeasance around the market. So I think this trend towards demonizing short sellers has come to a head. Citron doesn't do public shorts anymore, because the minute that some big person says, hey, I'm short this X stock, that's like the calling for the apes to go in and just short squeeze the shit out of the market. So, I think fundamentally the markets are a little bit broken. You shouldn't have an obvious fraud and have it survive for years on years. Like Nikola is still around today, which makes absolutely no sense considering they had a fucking fraudulent product, and it's a proven fraud. It's not fraudulent like,
CEO too. Yeah.
Yeah. So, when
that actually ties into our conversation from today. But real quick on that topic, did you guys see this? Maybe we did talk about this. which one is it? Which fucking window is it? It is Financial Times. This one. We don't have to read it. Have you guys seen this? Someone's getting a lot of static.
No, we saw this last week. Oh, this came out today that they is officially
No. It was just the idea that of Chris, what Chris was saying, that there is some benefit to having short sellers in the market because they do uncover fraud. And South Korea is now banning short selling until 2024. So we have an example of a market that's going to see what it's like when you just actually can't short stocks.
That's not healthy. That's not healthy.
Well, we'll see. Is there a different? Are they? I'm going to see if it means that like you can't buy puts, because then that means you can't hedge. Like it's different. Like buying puts to be able to hedge is different from actually short selling the stock.
Yeah, no, short selling. What the active short selling versus puts, for the people that don't know in the chat and everything else. So, if you want to short a company, let's say the company is worth $100, and you think, hey, this company shouldn't be worth $100; it should be worth $50. What essentially you're doing is going to the broker that you have right now saying, lend me those 100 shares that I want to short, and you go and you sell them in the open market and you collect that credit. So you get $100 credit for that one share. And if the stock goes down to $50, now you can go back into the open market, buy it for $50 and give back that one share, and you get a net $50 profit. That is how you short sell. The reason why that sucks is because sometimes what happens is really big people, they'll short the hell out of a company and they'll say, let me get 1 million, let me get 5 million, let me get 10 million shares. They go to the broker. The broker says, okay, I'm just holding this money for other people, who are actually invested. I'm going to give you those shares with the intention that you're going to give me back those shares, not at a different price, but at the same, just those shares. So if it does go down to 50, you can make a shit ton of money on the way down. The problem is the max that you will be able to make is 100% return. On the other side, if you are wrong, it could go to 1,000, and now you owe 1,000 times that 10 million shares or whatever million shares. So short selling is very dangerous, and the only people that should be short selling are people that are heavily in the know that there is something going on. Most short sellers, they don't short based on valuation. They short based on like information inside that they have uncovered that could be massive frauds. And that's where Chino's fucked up.
Well, it's the naked shorting that was the issue that they were allowed to do. But in terms of the movie, what was also interesting is what's his name? Kenneth. His name is Kenneth Griffin from Citadel.
Ken Griffin. Yeah.
Ken Griffin from Citadel. What was interesting is that the SEC had a 2-week look into this whole debacle that happened during the GameStop. And then that's it. It was over. So and whatever they did in the background, which they did a lot to shut down retail investors, like it really comes to like 2 weeks to look into something like this. It's kind of amazing.
Did they say anything in the movie? Did they talk about the fact that Robinhood banned?
They did. And they went into that. And that's because Robinhood got a call at night of some sort. I forgot when. I think it was like 3 a.m. And in fact, if you remember, Elon even had a conversation with Vlad a long time ago. I remember listening to this. So, but he had a call. Hey, you gotta put up $3 billion in reserve for the trading that's going on to safeguard whatever it was to safeguard. So they never had to do that. And it was during that time because Robinhood was the outlet for doing all of this sort of these option plays. So it's really messed up if you look at the bigger picture here, how Wall Street really fucks retail investors. I'm not saying I'm going to short Robinhood or I'm not going to buy the stock. I don't care about that. I will buy the stock all day long if it's a good value. But it really is messed up how they pushed Robinhood into that situation. I don't think Robinhood had a choice.
See, one of the key things though that the movie highlighted, but no one seemed to talk about was GameStop was actually a pretty shitty company. You saw that part where the guy was like, it was a terrible company. So even the guy that bought GameStop shares in the hope that it would go up, he was one of the workers at GameStop, and he saw, number one, customers weren't coming in, and they would keep launching these cock-a-brain ideas that would never work, that didn't do anything. And literally the guy is like, this is stupid. This business is going to go out of business. And yet GameStop is still here today. So, I mean, at the end of the day, if you think about it, the SEC, by shutting it down, they did prevent the big guys from losing a lot of money, and they eventually did go down. But imagine all the retail investors that bought in at the top, and now they're sitting on 90% losses. right? That's pretty crazy. And that's
Yeah,
what happened to that nurse.
Yeah, but what you're forgetting
yeah.
is that that whole thing started as a Wall Street bets thing. It was not because people were investing in the company. They were specifically trying to make the short sellers lose the money because it was like what 90% shorted at the time. People were not investing in that company because of fundamentals. They were like, we want to squeeze the shit out of them because they're always doing this to us, right? The evil short sellers. It had nothing to do with fundamentals. They were literally just saying if we pump the stock, they're going to lose money. That's all it was. So yeah, the company was crap. Everybody kind of knew that. And then they moved to the next stock, which was AMC. There was nobody in the movie theaters. People still buying the stock. But it was just to like teach the short sellers a lesson because of this idea that, the same idea is an extension of like the evil billionaires, right? That don't pay their fair share. Same idea.
Yeah.
But I think the reason this was really important to me when I saw this whole saga happening is because like market makers really do manipulate stocks. Like we know this is a thing.
They have the power to do it. Yeah. Yeah.
They have the power. JP Morgan, you guys can look this up. JP Morgan 2020 fine. You will find a CNBC article, 920 million. They paid like a fucking traffic ticket because they were doing illegal market making activities. The SEC charged them $1 billion and they just paid it. They're like, all right, whatever. Because they make so much money on the back end from this.
When this like happened, the Wells Fargo thing too. The Wells Fargo thing we talked about the other day when they fictitiously created and reported a whole bunch of new accounts, made billions of dollars in stock appreciation, then had to pay a fine that was a fraction of the money that they made.
But the thing is, when
the inertia is so big, I have not left Wells Fargo, by the way. I am still with Wells Fargo.
But the idea is that you could argue that the government agencies are actually in collusion because they get the fine money. So it's like we're going to get our piece.
Yeah,
you're pay us the fine.
SEC. That's why Elon has no respect for the SEC. Correct.
Well, yeah. Well, that could be a transition into the that Media Matters thing.
But real quick, what I was going to say here is I think that whole GameStop AMC thing was so important for us as content creators and retail investors because that exposed, I think, at least 20, 30 million people to what the markets are. Like when someone takes 10,000 and turns it into 30 million or whatever crazy numbers happen, people are like, I want to get in on this. And even if they end up not having too much interest because you have to do due diligence and research, they like are exposed to what the stock market is. I mean, that's how I really got into it as well. 2021.
Wait, you mean wait? You're saying like the dark underbelly of the stock market, or just the
no? I'm saying the AMC GameStop short was a moment in the zeitgeist of culture. Like on Instagram, in my Instagram community of people that I don't like, my friends that don't give a shit about the market, they were like Instagramming photos about what was going on. It was a big thing for everybody that like GameStop was going to the moon. It became a cultural phenomenon, and I think it got more people to download Robinhood, learn about stocks, etc., which was good.
I mean, this is obviously COVID that led to all of this sort of behavior because everybody was bored at their home, and we weren't all smart enough to realize that's what's happening, that it's being inflated and pumped. Because we would have all left the top, okay? All of us would have left every single stock behind completely if we understood all of that. But still, the main point, I don't want to divert from it, is that Wall Street has these connections that we don't have, right? So they manipulate all of these people, and then they don't care how it hurts the retail investor. That's sort of pretty obvious because the way they did it was so flagrant. What they did to Robinhood and all the people who invested, I don't know how to stop that. That's the interesting thing what is the solution to that problem? And I don't think there is one, honestly.
Chris, you posted that meme. Not meme. You posted that video of like Godzilla destroying the city the other day.
Mm-hmm. Yeah.
Like that's how I see the stock market. We're like a bunch of people on the train, and like Godzilla is fighting King Kong, right? And we're the collateral damage. Like our retail money does not really interest the Wall Street. The big Wall Street guys, but they'll take it anyway. You know what I mean? Like, they're fighting it out. They're fighting each other, really, is what they're doing.
I fundamentally think that investing has changed and it's made it more speculative. And a lot more people are dragged on, especially on the retail side, to buy up shitty stocks that have no real future growth prospects. And the efficient market hypothesis is completely gone out the window, in my opinion. So that means that now you have the ability to, instead of looking at just fundamentals, to look at sentiment and actually make money on figuring out, okay, where's the retail sentiment going? Like, are they hyping up a crazy stock and keeping it afloat when the numbers are less than compelling, or the other way around? So I think right now we have to be careful because retail investors have basically made price discovery a secondary thing to market sentiment, depending on which stock we're talking about. So like, as an example, and I know people are going to hate this, but look at Palantir, right? Palantir gets to $22 or almost $22, and it's
there's a bunch
trading
of
at
people doing
like
shots. There's a bunch of people doing shots on X right now. You see?
yeah. And the thing is, it's like crazy amounts of speculation when fundamentally the business itself is overvalued. Now, granted,
Amit just bought a share yesterday, I think.
no, everyone has the right.
See the
everyone,
thing, he pushed. You literally bought it, and then it went to, you bought it at $20.99, and then it went to 20.
No, that was for fun. I did that at $15.99, $16.99.
No, but
you were the last one.
It actually went to $21 live after you bought the share. Like, what the fuck?
I do this shit, bro. This is what I do. Like, this is my shit. You see that sign in the back? This is what. Chris, go ahead. Continue.
Yeah, no, I'm just saying the problem that tends to happen is that now Wall Street has woken up to this and said, you know what? What if we took 100 really big content creators, right, and got them to pump a stock or pump a crypto, and then ride it to the moon, and then dump it all on these fucking bag holders because they're stupid enough to believe these people on YouTube and buy up all these shares. And then it's like, okay, now it's time for the rug pull, and they have the ability to do it. So think of all the people with the FTX thing. How many of them like became not just FTX, but all of these YouTubers during the pandemic became crypto pumpers, right? But there was always this entity in the background saying, okay, let's pump this bitch up, use the retail stupidity to get everything up and then sell at the top. And now who's bag holding? It's retail. So at the end of the day, retail's the one that ultimately lost.
Well, but they also lure retail investing, and this is the idea behind Inverse Kramer. He'll actually tell you a stock is a buy when he knows that they're going to sell, so that they have the liquidity to dump as millions of shares, or to dump a large position and still retain to buoy the stock price while they do a bunch of selling. This is no different than like the emails I used to get in like the early 2000s of like a pump and dump that was going to happen at 11 a.m. Everyone's buying this stock. It used to be an email. I mean, I don't know if you guys remember like chain letters that you used to get on email. Like,
yep.
I mean, this is basically the extension of that. And I'll say something that might be controversial, and I'm actually looking to get your opinion. I think the reason why we see stocks like Palantir, stocks like SoFi, what are the stocks? Stocks like Robinhood becoming so like memeified is all Tesla's fault. Because Tesla was like the original meme stock from like 2016. Everyone was shooting the shit about it. Guys like Jeremy started making channels about it. And then in 2020, it actually exploded. And then I think people who missed that decided, well, what's the next Tesla, right? And that's why I don't think, in other words, I don't think Palantir, SoFi, Robinhood would be as meme or as they are today if it wasn't for Tesla. Curious what you guys think of that.
Also YouTube, YouTube itself, and the proliferation of social media in the last 8, 9, 10 years has been absolutely insane. So I actually disagree with Chris in terms of, I don't think the volatility is that different. I think it just plays out faster. So we keep going back to the good old days, but in the 80s and 90s, if anyone from here remembers them, stocks fell 50, 90, 60, whatever, 50, 60, 70, 80, 90% too. They did the same thing. Except here, it takes literally a straight elevator down because every retail person knows. I know. I feel the same. Everyone knows.
She just checked the portfolio.
She saw the movie.
What happened?
She saw Dumb Money. I hate it.
She saw the stock. She saw Palantir today.
She's like, yo, I just got margin call. What the?
They took away the buy button, Dad.
I'm gonna have to sell my Barbies to cover those shorts.
Yeah. So basically saying that I don't know if it's any different in terms of the volatility. Okay, because Peter Lynch talks about the volatility all the time. Expect the stock to go half down, and we've seen that even with great stocks, right? Amazon, Google. So, but the speed at which this information moves and the lies that the information that's the lies that are moving, how fast they are. If someone says something that's not true, it'll affect the market massively before the upswing up. And I don't know if that happened before.
I also think there's a layer of content creators that there are really true believers that believe in these companies, but then there's also people that they get this high off of, oh my God, this video shot up because I did X, Y, and Z content on this one specific stock and it's got a giant retail following. So now it's like, okay, I need to make more content about this company. And it just keeps going. And then
Palantir, for some reason, there's like these couple of YouTubers.
And no one here does that.
Stop making content.
No. So first,
Amit.
you can't blame. No. You can't blame Amit because Amit's been there since day one. So he's been there since Palantir wasn't really a oh my god,
He's,
like meme
he's
stock
been there
kinda
since
thing.
Palantir was 45.
You know, there's
No,
a
no, actually, I was
difference-
there since Palantir was 23. Thank you very much. It
Yeah.
went down to
So,
6, and then we.
there's a difference between someone who like milks the content, because the thing is, some people, what they do is they'll chase it. They'll be like, oh my god, this company is starting to get retail heavy, so I need to start covering it, specifically because there is a lot of interest in covering that stock. And so it goes to show that, is this person an investor, or are they just a content creator surrounding this meme stock or this
The
one
latter.
Bro, that happened to me and that happened to me and VITALY with FUV. We would be putting out our content. We'd do an FUV video. It would get, you know, 2,000 views in like a day, and then we would cover like Neo Volta the next day, and it was like 200 people, and it was like, did we just do another FUV
We gotta
video?
go back
You
to
know,
the
we don't want
well.
to be those guys. We don't want to be those guys that are just covering.
No, but see,
same
here's the
stuff.
thing. No, this is a good point. My channel was very Palantir heavy, and then I was like, oh, I can talk about other things. But then I realized the other things don't get views, and so you have to really be very logical. It's like, okay, if I talk about Disney today, is anyone going to click? No. If I talk about Palantir, will they click? Yes. Okay, so now that one assumption is done. The second question to ask yourself to figure out if you can actually do this in a sustainable way is there enough news to discuss about Palantir? And I think we've seen this given the growth of my channel, there's too much fucking news that people care about, which is similar to Tesla. I think Tesla and Palantir are the only two stocks on the internet people can build a career off of, because there's just enough shit to discuss that people don't get bored. Because you would think that people would get tired of Stephen Mark Ryan by now. Nope. 70,000 views a video every day. 70,000 people still give a fuck about it every day.
And he's got his Patreon videos. Then he has his ex-subscriber only videos. Like he's got a pay.
And the thing is, he says the same thing over and over. It's just so fucking obnoxious.
He doesn't. I mean,
it's the same thing.
Well, there you go.
Over
You'll never
and
see him
over.
on this channel again. You know.
No,
I'll talk to him.
But the
I'm
point
just
is, there's
saying,
enough news to cover for Tesla. Because the thing is, Elon buying Twitter, Elon with SpaceX, Neuralink, fucking Elon farts. They're like, well, the implication of the gas and the gas prices because of his, like, there's just so much you could talk about. Same thing with me. Alex Karp farts. I'm like, shit, bro. Western values might be under threat.
Like it smells like
these
smells
farts.
like profits.
It smells like profits. Smells like gap profit.
It smells like someone selling some and making some profits.
Okay, let's transition to that.
Yeah.
Chris, you want to talk about that, Palantir? The insider selling?
Yeah, I mean, insiders have a right to sell. There's no qualms, ifs, or buts about it. The only thing is, it does feel like they're dumping on the bag holders who shot the
They sold at $21.50.
Yeah, and it feels like that, but I don't know. I
really, can you blame them? I mean, well, I don't
No.
see what the fucking big deal is about insiders that have very high share counts. I've been holding for a while, taking some profits. If we had the positions that these people had, you would be trimming those positions. Just because they work there, it doesn't mean that they have any less conviction in the company. I just see, she agrees. Thank you.
She has conviction.
She's like, we lost a house.
She's like, sell that shit.
No, but I don't blame Karp or Sean for selling. The stocks run up a lot, but I was talking about Chris with us privately yesterday about this $21 price, what he thought about it, and he was like, dude, it's getting up there. And as he said that, literally at 4 p.m., Chris, we were on the phone, and these guys were dumping right at that same time because it's getting up there.
What's the market cap at $21?
49
45.
billion.
46, 45. Yeah. It's close to 50. Yeah.
Bro.
How much do they make in revenue again?
2.1 billion, but they have like 80 million in profits. It's like, it's just, here's the thing I want to say on Palantir real quick. I was talking about Adam to this on the phone today. NVIDIA has we'll talk about NVIDIA right after this. NVIDIA has a stupid valuation, right? But it doesn't matter because their growth is just like, you can't, like, how many companies in the world are growing 200% year over year? Not enough. Palantir also has a stupid valuation, like if we just are honest, but the growth isn't there. So that's the disconnect. It's like Amazon, Tesla, NVIDIA, they could have theoretically stupid valuations, but they're growing 50% year over year. NVIDIA 200%. So it's like, okay, I don't give a fuck about the valuation because what other company in the planet is growing that much? Palantir is only growing 15% year over year. So the valuation can't get stupid because if the growth isn't there, eventually things will come back to reality, right?
I actually agree with Rangu. It is, I think the forward PE was 30. Someone mentioned on Twitter, correct me if I'm wrong. Yeah, there you go. 30 forward PE. It's actually getting cheap. It's actually not even stupid. So NVIDIA is I get your example, but yes, these stocks that are falling off a cliff and that are running up, I don't understand. So we'll see what happens.
I'll say this.
I'm
Oh, sorry. Go ahead, Carl. No, you go ahead, Carlos.
I just literally just want to answer Wayne Lynn at 6:30 p.m. I think I'm the perfect guy to answer this. Look, as much as I don't like Zuck and I think he's harming our fucking civilization, he's selling Meta, but he's selling tiny little positions. He's selling like $20 million here, 80 million. The guy's a fucking multi-billionaire. Like, he needs money too. Like, even I got to defend the guy's right to sell some fucking shares. Like, the valuation is what, 700 billion, 800 billion dollars. He's not hurting the company by selling some.
And the stock is going up. Let's point that out. In terms of Palantir, meaning that it's super profitable. In Palantir, it's not profitable. So it feels like when they sell, and I think they do also have a right to sell, but it just feels like they're dumping on the people who believe, because, you know, they're pulling out a lot of money, not a little bit too.
But hold on,
and it's not just taxes.
Wait,
so you can't even use that as an excuse.
We know Mark Frontmeyer personally, who had a ton of money in FUV, and at some point,
I don't think he sold.
He didn't sell anything, and FUV was at $36.
He should have sold. We all should have sold.
I mean, do you understand what I'm saying? And that was a company that had like a $50 million market cap when we were looking at it, and it went to $2 billion. And he wrote it all the way up and wrote it all the way down. I would not have been bothered or been upset or thought differently if he would have taken, I don't know, 10%, 20% of his portfolio.
If you've run up that much, you should at least take your principal out. I don't care who you are. If you've run up 300%, at least, for the love of God, take some principal out.
I think it was like,
and just relax.
It was like 2000%. But anyway,
I mean, it's
okay. Do we want to do Binance first or NVIDIA first?
Wait, but before we, we can do NVIDIA first, because what I was about to say ties into it. The one thing people have to be very, very careful of when it comes to when it comes to investing in companies and seeing these giant waves of growth, look at the industry. Do not ignore the industry, because the industry's business models could be very cyclical. It happens with oil and natural gas. It happens with commodities. It happens with solar. I know you're going to hate me for saying this, but it happens with semiconductors too, where you have these moments where semiconductors become the most important thing on the planet, and then years go by and it's like, hey, you know what? Maybe this wasn't a big thing. And then the next 10 years, you're waiting for the next run up to come in. I mean, this happened during the .com side of things, where people just had this giant thing like, oh my God, semiconductors can do no wrong. A great example of this is something that my dad actually lost a lot of money on, which is Qualcomm. Let me just show you guys real quick. So Qualcomm today, everyone's like, oh my God, it's a great company, right? Well, Qualcomm isn't like a new company. It's been around for quite some time. And during the .com bubble, everyone was just buying everything. And my dad literally bought around here at 57, wrote it up to like almost 75 something. He thought he was the smartest person in the world. And it didn't happen where, the value was there. And it took Qualcomm, especially if you bought at the highs around $75, it took you almost, 14. So
click and drag from that point to that point.
Damn, bro.
Yeah.
It'll tell you how long it took.
It took almost 10 years to recover. We could just do that. Yeah. It almost took 10 years to recover. So be careful when it comes down to it, because what happens is,
you want to see a worse chart? Bring up Verizon. Take a look at that for a second.
All right.
Listen, I've invested in Verizon, by the way, way before Chris even brought it up. Yeah. Take a look at their chart over the max.
Yeah.
So their high was what, 56?
Bring up AT&T as well, and you can take a look at a very similar thing. Bring up Intel, very similar thing.
Right.
These companies value trap.
Bring up Cisco.
No, I agree. But the key is to buy at the bottoming of the cycle, not at the top of the cycle. That's the thing. You just have to understand that, hey, right now, you guys were amazing when it came to the solar cycle. You guys were ahead of the time. The market didn't recognize how valuable solar was going to be, especially in a higher natural gas environment and with lower interest rates. Because the minute those electricity prices shot up and interest rates were low, people were going to go, hey, I need to get solar. You guys were ahead of the curve. And that's why you guys were able to ride it from $20 to $340. So imagine that kind of return. That's one of the keys to investing, is that knowing where the market cycle is for a specific industry and being ahead of the time and being at the bottom and then riding it to the top, and then eventually having enough cojones to sell at the top. You know, because you're saying, you know what, the cycle is over. Right now, in my opinion, Verizon is at the beginning, and same thing with all these other telecom providers, the beginning of the 5G cycle. So that's what I'm investing in.
I agree with you. But if you take a look at how long, and you just mentioned it, how long these cycles last, the tippy top of that Verizon cycle could be a decade away. Okay. As long as you're in it for the short term and you want to make 20%, 50% some alpha out of it, you can. But there is a cost of capital that you keep forgetting about. That if I hold this piece of shit Verizon stock and it's not in a specific dividend portfolio, which I expect not to go up, by the way, 20% is amazing returns in a dividend portfolio. If I expect that, that's fine. But if you have capital and you're not allocating it to something high growth, you're going to be sadly mistaken, because Verizon is not that high growth thing. And it hasn't been in 20 years. And AT&T hasn't been, and Intel hasn't been, and Cisco hasn't been. So these things aren't going to change.
You have a good point, but Intel was at 25 this year. Now it's at 46. So if you got it at the bottom, and it just reversed to the mean, then you make a shit ton.
We were also in the crash, right? We were also after the highs. Everything sort of just completely tanked. So a lot of things are up double right now. A lot of things, not just that stock.
But the idea is that the idea is that the dividend is what it's basically paying you to hold it. If you had no dividend on Verizon, you would know.
That's exactly right. If it's in the dividend portfolio and you're happy to wait the 10 years, collect your 7%, you're not going to get massive gains. That's great. But if you are in it for growth, which I think KRIS is also talking about growth, that is a sad mistake, because you could just look at Verizon's chart, look at AT&T's, look at all these companies' charts. They have been shit stocks for a very long time. They do have some return, but it takes a long time.
It's mean reversion versus growth. KRIS, you want to clarify that?
You keep saying mean reversion. So your TFC, while you were holding that, instead of putting it into some even Palantir, you could have bought more Palantir. You're holding TFC for some mean reversion. It's been a year. It's going on 2. You could have just made 4x on Palantir, because that's a
no. But remember, we did options. We did options. It's been 6 months. We did options.
But okay, you could have done options on Palantir. So I'm just talking about stock.
True, but that's way more riskier than options on something that's reverting to the mean, right?
So, but this idea, but the thing is that this reverts to the mean. This goes back to what KRIS said. His dad could have spent a bunch of money and bought Qualcomm at the bottom, thinking that it's got to revert to the mean. The reverting to the mean took fucking 10 years. There is no reverting to the mean. There is no mean.
Every 5 years,
whatever.
That's where due diligence comes in. Yeah.
I think you guys, once again,
companies
Carlos,
are reevaluated.
I'm sorry that they keep missing the one important thing, and KRIS sounds so convincing all the time, but he keeps forgetting the value of money while it's in your hand. Okay. Even if he's right and it goes up 50% and it takes 3 years to get here, and at the end of the day, he's going to post on Twitter, I was correct. Absolutely, KRIS, it's going to go up. I agree with you. TFC is going to go up. It's going to revert to the mean. I don't want to be in that stock for 3-4 years while Tesla might do something magical, which they will, while Enphase might actually do something magical, which they probably will. And even Palantir has a chance to do something magical. So as long as you know you're buying a dividend stock, and I have lots of dividend stocks, I still buy them. Okay. I'm buying Vail. Okay. I bought AT&T for a long time. I bought Verizon for a long time, but I knew why I was buying it. And it's to collect the dividend. That's what's important here.
So let me clarify a couple of things real quick. All right. There is a bigger thesis behind Verizon than just, hey, I want to collect the dividend. And I'm actually playing on people like you, Vitaly, who are looking to just get a nice, safe, secure dividend. Because right now, a 7%, 8% dividend is not as it's not that appealing when interest rates, you can just get 5.5 from the money markets. But if you think that next year we're going to hit a deflationary cycle, what do you think that's going to do to people chasing a 7.5, 8% yield? People are going to be bidding those assets up. This is exactly why yesterday's 20-year treasury, and I covered it, 20-year treasuries, they got bought up. A very successful auction. Why? Because people are buying long duration assets right now that they know that they're going to be able to get a fixed income from it. Verizon in the short term has had some pain because of the 5G transition and how much that costs. And so they had to load up on a lot of debt. But if you look at their maturity schedules, you actually have to really deep dive and understand, like, wait a second, there's actually a lot of value in Verizon that people are not necessarily understanding. They're on an inflection point in terms of a growth curve in 5G because they're adding close to 400 to 500,000 fixed wireless customers a quarter. That's a lot of additional revenue that's going to be going to their bottom
KRIS,
line.
can I interrupt? And just because what you're pointing out here is basically been our arguments all year. You're saying as soon as rates drop, that's what you're saying, Verizon will look very attractive because everyone's going to chase the yield, which I don't disagree. People are want to go to a 7% stock. Why not? But then what happens to all the growth stocks like Enphase, like Tesla? What happens to them when the rates drop? Do they go up?
I don't know.
20%?
I don't want.
No, but do they go up 20%?
No.
Usually those stocks tend to run
they're
really
not
fast.
going to go up. They're not going to go up for two
they're
reasons.
Not going up. Okay.
Yeah, they're not going to go up for two reasons. Number one, even with rate cuts that start, there's a huge amount of rate cut lag that happens before the consumers become confident getting back in. Also, the cause of those rate cuts are going to be around recession. As the consumers weaken, it takes a really long time for the consumer to say, hey, you know what? I have a secure job again. I have extra money on the side again. I can start spending money on secondary things like a new car or a new Tesla.
So you're saying the way Wall Street works and the market works is we wait for the consumer to be flush with cash before the actual stocks go up? Is this what you're saying now?
Depends on depends on
that
the
is
item.
not how the market works at
it
all.
Depends.
That way for at least
it
30 years
depends
I've been
on
watching
the
it.
dude. It depends on the item that you're talking about. If you're talking about a brand new car versus a cell phone plan where you can actually get home internet for $25, there's a big disconnect between, hey, I'm going to go out and spend $50,000 on a new car, even though I may not have a job 6 months from now, versus, hey, let me switch to an internet plan that's saving me $10 a month. This is why the market cycles are important. If we're in a late stage to recessionary market cycle, you want to be in industries that are very secure against drawdowns in that industry. That's why the telecom industry traditionally does very well during recessions. Granted, Tesla will do exceptionally well. Maybe even Enphase will do really well once rates drop, but that's with consumers starting to build capital again and having the money to say, you know what, I feel comfortable that I'm not going to lose my job. I feel comfortable that I have a little bit of savings where I can go and buy this additional thing that you may or may not.
I want to say something, but this is where I really fundamentally disagree with you. I really think you're not saying this correctly. I don't think you understand how much pent up demand is going to be unleashed the moment that these rates come down, because you have to also understand that this at least with the solar and EV incentives, they become point of sale next year, bro, which already is going to make, it's already going to unlock a certain amount of demand, simply because you're going to be able to deduct the $7,500 or the 30% of the cost of a solar install system from the purchase price. So even at the higher interest rates, you're going to be able, people care about the monthly payment. That's what they care about, is what is my fucking monthly payment? That's what they care about.
Carlos, you're right, but I think we're missing something. The market front runs all of this stuff. So if the market sees rates are actually going to something reasonable, and this is known for cross stocks that usually PEs bottom out 8 months before they actually before the company bottoms out. I'm messing it up somehow. It's either the PE bottoms out. I'm getting lost in the actual.
I'm the one that's drinking here.
Yeah, I think I drank a little.
I hear what you're saying, but my point is.
Hold on. Let me just finish. Let me just finish the thought. Basically, 8 months before this reversal happens that you're talking about, Chris, that's when stocks usually average start going up. So if the rates aren't even fully low and people are not buying solar and they're not buying EVs, the market will already say, "Hey, this is turning around."
No,
Tesla has bottomed in revenue.
I disagree. I think because of all of the attention that has been paid for those two companies specifically on what is the gross fucking margins, that they are going to wait 1-2 quarters to make sure that those gross margins have stabilized. Gary Black just posted something today. I don't know if you guys saw it, because I'm a subscriber to his thing, so I don't know if it was a public thing or not. But he was talking about the idea that that raise in rates will do two things. It will let Wall Street know that Tesla will finally stop cutting prices. So what they're going to need to see is a quarter or two of them hitting their production goals without having to cut prices before I think Wall Street's going to feel comfortable giving them the multiple that we think they deserve. Same for Enphase. They've messed up and overproduced, so they're going to need to show that there is a steady surplus of demand for their products, and they need to show revenue again before I think that Wall Street's going to jump again. I'm just talking specifically for those two.
It's going to be interesting, actually, just to take a look at it, Chris. And next year, as the rates drop, and if Enphase is still announcing, hey, this is still a bad quarter, I wonder if the reversal would have happened by then. So we'll watch it, obviously.
So the fundamental debate here is, you guys think that when rates get cut, Tesla and Enphase kind of go to the moon, these stocks that are good for low interest rates environments. And Chris, your argument is that doesn't happen as quickly as we think it is, whereas a consumer product like a cell phone plan goes way higher than a $50,000 car. Essentially.
There's also there's also another factor, and the reason why Verizon is down so much from literally 2 years ago is up, it's down 50%, is because they took on a lot of debt. Every time I speak to anyone why they're not buying Verizon stock, they're always like, oh, their balance sheet looks terrible. They have so much debt. The one concept that they don't realize is that everyone right now is like, oh, company has lots of debt. That means that, oh my God, that means that their interest rates are going, I mean, their interest charges every quarter are going to go through the roof. And that means that all that equity is going to get wiped out. And it's like, no, you have to look at the debt structure. Look at where the debt lies. Most of their debt is actually financed very long out. So they're not worried in the short term about any of this stuff. Also, their CapEx is being cut significantly, which leaves a lot of room for expansion. I think fundamentally, we're not in disagreement that rates are going to be going down next year and the year after that. My thing is, right now you have these over leveraged companies that are amazing cash flow generators, but people are so worried about the debt that they're not buying them because they keep looking at the debt and saying, oh my God, this is a problem. In essence, though, the minute that the rates cut get factored in and they actually do go down, you can see that the triple Bs, the credit rating, depending on the credit rating that's out there for corporate debt, those actually start to matter and they actually start to go down significantly, which means that that debt becomes less worrisome. So all I'm saying is right now, my bet is, hey, buy into companies that have a lot of debt, but have a tremendous amount of cash flows that can support that debt without any issues, that are really undervalued. Like, look at Verizon right now is trading at a 7 PE, even after a 20% run with a 7.5% dividend on top of that.
Well, let me ask you, what was the average over the last 20 years? What did Verizon trade at? Take a look at macro trends.
What do you mean? Like
45, 50? Was that where it was at for most of?
No,
first,
saying the PE of Verizon. Well, the last 10 years, what was the average?
10. It was between 10 and 12. It was between 10 and 12.
All right, there you go. So you're going to eventually return to the mean. And how long does it take to get there? That's always been my question.
Yeah, it's going to get there sooner than a lot of people think. And remember, it all depends on markets evaluating that, hey, this company should be 30% or 40% higher than what it is today, just based on what the PE used to be and what it should be based on
Tommy Dimes, you just sold.
And that's on top of it. And that's on top of growth that's going to be coming in and their EPS going up. That's the factor that people are not looking at, because they're just assuming that, hey, their EPS is going to remain flat. No, they trust me. Verizon is one of those things that will look back.
I don't think I'm arguing with you for the fact that I think it will go back to the mean. That's what it does. If you look at the chart, that's what it does. And once again, we can invest in AT&T. AT&T is down as well. It'll probably return to the mean at some point too, unless AT&T is going bankrupt. They're probably not. And that's why maybe Intel returned so fast too after the bottoming process, because it went below its mean, way below its mean, in fact. So
yeah, I think the core difference is KRIS is trying to find these opportunities that can like revert to the mean, ride it back up. You and Carlos are just like trying to find that generational company.
Well, the thing is, right. I have a dividend portfolio. I don't talk a lot about it. We don't have enough videos about it, but I have plenty of stocks like this that I buy low. I was buying Vail at like $11 and $12, and I rode it to 20. I sold a little bit. Vail dropped back down to 12. I bought a bunch more. It went to 15 now. I'm doing all of this on the side too. I just don't think they're as interesting to talk about. I'm not excited by Vail. I just like the fact that it pays a dividend and it goes back and forth and it returns to the mean. So I get what KRIS is doing. I just don't find them as exciting in terms of changing my life. And I think me and Carlos are in this for literally transforming our lives. Like, we are not okay with doubles. That's not going to help us.
But I see the thing here. The thing here real quick is, you don't do options on these plays. I mean, the amount of money KRIS has in options on some of these companies, it can change your life.
It possibly can.
All right, but KRIS is 38 with no kids. I'm 46.
I'm not willing to risk 90% of my portfolio on options at this point.
I'll mess around a little bit on some options, but I've got to make sure at the end of the day, like, it's like what's Warren Buffett's first rule? Don't lose money. I'm trying not to lose money.
What's the second rule? Don't lose money.
Don't lose money. So
no, don't forget rule 1. That's
don't forget rule 1. Well, that's the idea. If you're 38 with no kids, or you're 26 years old,
rule number 3, don't talk about
you can throw a lot of money into some spreads and some call options and play a whole bunch of stuff that you don't necessarily care to lose, that you don't necessarily die if you lose. I don't have that kind of runway. I've got to be a little bit more secure.
While we're buying Bitcoin, I just want to point that out.
Well, I'm sure we're going to hear that, but I mean, I have done. Yeah,
Bitcoin.
All right, speaking of Bitcoin, let's do this. We got to get through this one. We got to get Binance founder CZ steps down, pleads guilty. This is the guy that started the FTX bank run. He called SBF out on his bullshit. Then, FTX collapsed. 4.3 billion in fines.
So you glossed over it, but what he did was sell on the open market and tweet about it, the FTT token, and he said, I'm getting rid of all of it, which caused the bank run on FTX. So he was a big instigator to basically screw FTX and every retail investor, and everybody thinks he's some sort of a hero. He screwed a lot of people, by the way, while showing how vulnerable FTX was. So let's start from that premise,
I'd also think before you go any further that this is important. Can you please share the screen? Yes. Binance is the number one holder of Bitcoin in the world.
Wait, really?
Yes, second only to Satoshi Nakamoto, the creator of Bitcoin. Binance has the most Bitcoins in the world, 643,000. Grayscale next. The U.S. government actually, seizures, has 207,000. MT.
Mount
Wait, the government has 200,000 Bitcoin?
Oh yeah, when they do seizures for like all the stuff Chris is talking about, fraud and criminal activities, they seize the Bitcoin and
apparently they can find the criminals and take their Bitcoin.
They can find them. Bitfinex, Chinese government is 194,000, and then MicroStrategy, our boy, Uber Super Bowl. But then look, rounding out the bottom of the list, look how many Bitcoins Robinhood has. This is Robinhood personally has. Anyway, the point is, this wasn't just some random guy committing fraud. This is like literally the number one public owner of Bitcoin. Huge.
So
huge
CZ left, some history. He left, and I was on Binance for a long time. I stopped using it because it became too shady. But he left Hong Kong because he did not want to follow the rules of Hong Kong for crypto. And obviously China's against it now. And he went to some Cayman Islands or some bullshit. And then obviously ran illegal casinos here with Bitcoin, with crypto in the United States. That's why he's in trouble.
It's just crazy that this actually happened because he was the golden child after Sam messed up, right? He would never do something that Sam FTX did, but it seems like, he kind of did. I guess what are the implications for crypto?
This goes back to the conversation that we started with this, that markets inherently are manipulated. I mean, ultimately, we're just finding out now that these markets are heavily manipulated. It is good that they're catching these guys. And they're flushing them out. Every time that they catch one of these guys doing this, it makes it more stable. And for me, it gives me more confidence that that this won't happen again, or that if it does, we'll be made aware of it. What happened? Everybody else, you're muted. Everyone muted themselves. What's up?
Sorry, I was muted.
I was like, shit. I have the floor. Let me.
Chris, go ahead. Your thoughts.
I'm not a Bitcoin guy, so I really don't have really much to compete.
Well,
I will say this though.
When you buying the MicroStrategy spreads, are you doing that?
No.
He's not in that. He's not in that.
No. I would say, I'm curious, does Robinhood own them as like personally own them, or is it like that's on behalf of its shareholders?
No, it's on behalf of the people who own it on the exchange.
Oh, okay. So that's what it is. It's not that Robinhood owns that many in the asset class, right?
Yeah, but they're basically the custodians of the wallets. Yeah.
Okay, no. As long as it's a custodian, because that means that on a balance sheet, it's something that's a negative also. So a lot of times people will look at a balance sheet and be like, oh my God, this company's got like 50 billion in assets. And it's like, bro, they're just custodians. Like they owe 49 billion of that to their investor, to their users, right? So don't just look at the assets, because I know someone posted like, oh my God, this bank has this many assets. And it's like, yeah, but they're just custodians. Like, don't think that that's their money.
It's the same thing with BlackRock. BlackRock we keep talking about. They're mostly custodians of the money.
Yeah. So like right now,
but they're like the reason why I say that $60 trillion.
The reason why I say that is because I looked at the number and I was just like, wait a second, Robinhood has that many Bitcoins? And I was in my head like, wait a second, if it's got 35,000 times that many Bitcoin, I was like, wait a second, that's a huge amount of money that's no one even talking about. So I guess the difference is MicroStrategy owns it on behalf of its shareholders because they don't have clients that own it, versus Robinhood that's just a custodian. So, okay, interesting. Yeah.
Okay, so that is CZ. Let's go to NVIDIA, because this thing was just absolutely insane today. NVIDIA earnings, revenue 18 billion versus 16 expected. So 2 billion more. Earnings per share $4 versus 337. 206% year-over-year growth. Fastest growing public company on the market. Net income at $9 billion or 371 per share is up from 680 million a year ago. So last year they made $680 million in profits. This year they made $9 billion in profits. Stock didn't move after hours. So what are you guys thinking about the pricing and the market response? Vitaly, you can start.
I mean, it already ran up so much that if it pulls back a little, what did it pull back? 1%? Is this what we're talking about? And that's because they gave some slightly weaker forward guidance for China. I mean, like, honestly, the stock is going to continue going up, and I'm going to share this just to take a look at the estimates for the stock. Hold on a second. And I'm really sad I sold. That was a big mistake. I sold in the 300s, but still, and I was up 3x. I did the KRIS move. I'm up 3x. I got to get rid of it. And no, once again, you just hold quality. You don't get rid of it. And look what they're projecting. They're projecting year-over-year growth, 300% still the following quarters. Like,
okay, hold on. Who's projecting this?
Well,
Please.
I don't know. Whoever is projecting this, analyst, who's projecting this? Where these projections come from? You tell me.
I don't know. You're the one that clicked on it.
Yeah, I'm at Seeking Alpha, showing what they're actually projecting here. These are the estimates, the consensus estimates.
Right, but that's what I'm saying. Who's projecting?
Are you arguing with me? These are just the projections. I don't know.
No. That's what I'm saying. You got to know who's actually projecting this.
Right,
to actually
you guys can dig further into it. My point is,
I could project 10 times this number. Doesn't mean I'm right?
And usually they've been wrong. You're absolutely right. But the point is, NVIDIA is not slowing down growth right now. You should know that part of it at least. Even though they mentioned this little China hiccup that's happening, they're not slowing down. People are still going to be expanding AI and AI capability and building their data infrastructures. It doesn't take a year to do all that. It takes multiple years, maybe 5 years. I think NVIDIA is on a long run here. We can have pullbacks, whatever happens. A quarter is bad here and there. I'm pretty sure NVIDIA is still going to the moon. And we've been saying this for a long time.
KRIS, you think NVIDIA is going to the... Sorry, I was meant to remove it. KRIS, you think NVIDIA is going to the moon still? Or
it might. I don't know. This is pure speculation. How long this company?
It was a definite no when it was 300. At 500, it's a maybe. It's a maybe.
Yeah, it does, because look, when the market and the sentiment change, you have to change along with it. No one could have, at least I did not think that this industry was going to have this much interest in it, because for me, it's always about, okay, where's the most of the value going to come from? You know, these guys are picks and shovels at the end of the day when it comes to the AI foot race. But that also means that if the AI foot race starts to get highly competitive and people start doing things on their own, because I mean, think about how much money that NVIDIA is making right now off of its GPUs. You think that Google, Microsoft, Amazon, Facebook, which are the biggest users, are saying, yeah, I love paying a premium for the GPUs. Like, they're going to try to get around that. I mean, this is a big vulnerability for them, because if they want to actually win the AI war in terms of providing services and monetizing it, they're going to have to create products around it that they're not beholden to NVIDIA for their future success. And I think a lot of times that is what worries me about it. But these estimates could be absolutely goddamn wrong, and they could be higher than what it is today, but they can also be materially lower. So my whole thing is, whenever I try to look at these estimates, I'm like, okay, who's making these estimates? Because estimates can vary wildly. Some of them are like really pie in the sky, and some of them are just stupid low, right? And that's where, if you look at like the Cathie Woods of the world, when they first, this is the sad part. When Cathie Wood first came out and said Tesla was going to be this valuable, everyone laughed at her. And then when it came to pass, everyone's like, oh my God, she's a genius. But then she's picked like 300 other things that are complete shit. And yet it's always goes back to, well, she got Tesla right. So
you're picking out outliers, and that's great. But these consensus estimates is the average of all of these analysts, I would assume. That's how they put it together. So most of the analysts are projecting that this still goes up and to the right. It's not just a Cathie Wood thing. This is not a Cathie Wood.
No, but like test scores, they should probably get rid of the highest estimate and the lowest estimate. You know what I mean?
Well, I guess they run some sort of average, and those top ones drop off anyway, I would think. But
because Gordon Johnson with his $20 price target,
you're saying we should do the mode, not the mean. Okay, got it.
Exactly.
The problem with analysts is analysts will base it based on what they're seeing today, and some of them are really good and some of them are really bad. Like it just depends on which analysts are covering that. So I would say look for the analysts that have a better than usual track record and use them as the way to make the estimate rather than just looking at every analyst. Like, so for me, I would say, okay, let me look at the top 5 analysts in the semiconductor space who've gotten a lot more right than wrong, and then use their estimates and then base my mean on those 5 guys rather than the guys who've always got 60% of their shit wrong or 80%.
Wait, real quick. You said, do those 5 guys come with fries?
Yeah, they come with fries and peanut oil. It's delicious.
And that's why we keep him around. He adds value.
I just want to say this.
I heard 5 guys. I'm like, nope, I got to stop Chris.
Amit is here. We're too lazy to do our own StreamYard. That's pretty much it. You know,
remember, be excellent. Remember, be excellent, be sexless, and leave. Remember, Amit?
I just want to say this because a couple of years back, I was talking to a bunch of my friends. These are like super PC nerds, built their own PCs forever.
No, hold on. We got 500 people here. Hold on. That hasn't happened in a long time. Let's ring the bell for that.
Oh, wow. Say yay. Savannah, say yay.
Well, okay, 500 people. How many hit the like? Can you guys just hit the like right now? All of you, all 500. Boom,
but don't hit the like button. Why are we abusing the like button? Just gently rub your finger in a circular motion.
Around the like button.
Maybe you want to lick your finger first and then
do that later, but just smash
just
that.
Like tap it. Just like be
and
easy
6
on the
people
like
left. They're talking about fingers. But let's get the fuck out of this pod. What the hell?
But
Did
let's
YouTube
at least get a fifth. Let's at least get to 100.
No,
look at that. We got 114 likes right now.
I know. It's like you're watching it for an hour. You can't hit like. Are you serious?
Hold on. I want people in the chat. Put in the chat if this is your first pod. Put in the chat if this is your first pod. If YouTube just pulled up this stupid thumbnail and you clicked on it. Put in the chat if you're new here. I want to see it.
We've had a lot of new.
All right, go ahead,
Carlos. We've been getting a lot of new. All I wanted to say was I
got some breaking news. Hold on, let me just share it real quick.
All right, wait.
Just sold Verizon, guys.
Hold on. Take a look.
Okay, let Carlos go, then we'll do you. Go ahead,
Let me
Carlos.
say this thing real quick. Is that to your point about NVIDIA, a bear case for NVIDIA is a company like Apple. Apple saw the writing on the wall. A bunch of my friends years ago, when I was talking to them about what are the best companies to invest in, like the VR space, like how could I figure out who's going to be like the winners? And they were all saying that hardware is king. The people that can vertically integrate, the companies that can vertically integrate everything, including making your own chips. As long as you're not beholden to having to outsource your chips, you will be the winner. Anyway, they were and that was when Apple was like just first starting to develop their own silicon. So that would be a bear case for them. Yes, these companies realize, why are we buying chips from NVIDIA when we should be developing our own chips in-house that are specific to our
That is a bear case. 100%.
How long did
100%.
Apple take to develop their silicon, by the way, when they first started?
Long time.
I mean, 5 years, 6 years, 10 years. I don't know.
Rango
might know.
Rango
but either way, it's over 5-6 years. So I think NVIDIA is safe for at least half a decade.
Well, but that's not to say that these companies aren't working on it already.
Of course, they're working on it.
Right. So
no doubt.
You
But
don't know where they
it's
are
hard to
in
just transition
cycle.
to different architecture and do all of this in 2 minutes.
So quickly, CZ and Yellen just had a conversation real quick.
Oh, what?
I
was not expecting any of that. What just happened?
That was a joke. Chris said it was about Verizon. Chris, you fucking liar. It wasn't about Verizon.
Whoa, what was that? I didn't even know. Was he using
CZ fucking giving Yellen the kick, bro. The old kick and run.
He gave her the stick.
Honestly, you got me on that one. I was not expecting that.
Oh, we got 516. Hold on, we got 16
all right.
more.
No, it's
And
over.
we got 100%.
We got to entertain these.
No. They come back tomorrow. That's the whole point.
The world.
Okay, one quick point on video. I just want to make them. Then we'll end it off. Is the data center revenue that like these GPUs are being ordered. I agree with VITALY on this. I don't think this is slowing down. I mean, maybe it's not as crazy as the analysts think, but I think it's going up and to the right at a 30 PE or 64 PE. Palantir's more than that, and Palantir has like 1/10 of the growth of that.
Exactly.
It's just, I think this GPU demand is not going.
Okay.
In fact, the stock is so reasonably priced now. I'm reconsidering buying back into it. Okay, that is how reasonable it has become.
That's why
I'm not saying I have yet, but
the question
they are not slowing down for a long time. And even if we have any hiccups, it is an opportunity to buy NVIDIA if we have those hiccups.
All right. Well, then the question is, what is NVIDIA's production capacity? It seems like they will sell every GPU that
whatever TSMC's production
it's
capacity
TSMC.
is.
Yeah,
it's TSMC. It's not them.
So
the bear
China
case
fucks
here
with
is China
Taiwan.
attacks.
That's the real bear case.
That's the bear case. There you go.
Yeah. Yep.
Oh, and by the way, guys, I've now tried both, and I can say that the mojito was better.
Yeah, the
I
mojito.
told you to do the mojito.
The mojito was better, but these aren't bad, dude. The ginger and lime is not bad.
In fact, I might start
No, I
buying
told you
NVIDIA, not for me even. I'll start buying it for the kids in their portfolio. That way I could ignore the price completely because their
He's like,
portfolio.
let them take the losses. Fuck that.
Let them take all the losses.
Let them eat it. Let them eat it. They'll learn
Their
something.
portfolio is going to last 20
Never
years.
buy at the
You
top.
know? And I do want to mention
like 20. Watch 20 years from now, the kids are like, man, you remember that time where dad lost our college fund on NVIDIA and Uncle Chris funded it with his Verizon calls? That's what's going to happen.
That-
You're going to fund my kids? I appreciate. If you're
That
gonna, are you
was-
saying this
that
right
was a
now? You're going to
myth.
fund my kids?
I
That
mean, if
was
you
a-
lose all your money in NVIDIA,
I'll
and you
take
know
it.
what? If you need some help, I'm your friend. I'll reach
take
out
it,
and be like,
man.
sure,
I
kids,
appreciate
I got
that.
you.
I appreciate that.
Dude, if Chris funds your kids' college bills, he will never let that go on the podcast. Every time you say
That's
something, gonna
fine.
go, well, who's funding
As long
your
as they're
kid?
going to college. College is like $1 million in 10,
No,
10
but
20
Chris
years.
would do it. Chris would do it like Mr. Wonderful in the Shark Tank. He'd be like, "Listen, all right, I'm going to fund the college thing, but I need $20. I need 70 cents of every dollar you make until I make 7 times my investment." And then
I'll tell you, there's one
that
thing that
2.5% dividend yearly.
there's one
compounded.
thing that I will never ever skimp out on, and that's like my families and my friends, like kids' college funds. Like I'll be the first one to give money for that. I'm like, bro, that is one of the best investments that you can make is in your kids' education.
Yep.
No matter all this other shit, bro. If I become a billionaire, I don't give a fuck. That doesn't mean anything.
Well, what about them not going to
Yeah.
college? What about this idea that college is actually just a waste of
Well,
money?
but let them
it's the
decide that.
I don't think
We
my
should
kids
be
are gonna
able
go to
afford
college,
it.
bro. College is trash.
I honestly,
College is not
I don't
trash.
know. Savannah, you want to go to college? Do you want to go to college? She's like at YouTube University right now. No, I don't.
We
I
just
actually don't-
lost a house, Dad. I don't know what
It's-
you're talking about.
It's
I
the
actually don't think-
opportunity.
You know,
I think it's the
you're right.
opportunity.
No, you're right.
It's the opportunity that they get to choose what they want to be. Like, imagine right now you're the smartest kid in class, and you have to choose between getting a full-time job, taking care of your parents, or going and furthering your education. You know, I totally agree with you guys. I don't think college is for everyone. I think college is for maybe about 40% of the general population. The other 60 can do with like a 2-year trade school and just be just as happy. But it's those 40% that they could be the ones that cure cancer. They could be the one that develops next NVIDIA. You know, that's the beauty of this country, that you could be anybody and eventually one day become a fucking innovator. Like there's no tomorrow.
And that's
But
why
the thing
college is not trash.
Yeah.
Education is incredibly important, but you have to
Yep.
be the right type of person to want that education. I agree with you.
I
Some
mean,
people don't want the education.
I'm sorry. I watch too many videos of what's happening on college campuses right now, and they're basically, it's not about education. It's more about indoctrination.
You're watching the videos of the bad stuff when my college experience was different.
No,
I did
our
not.
college experience 20 years ago was different. But when
No,
you got,
I'm saying
when you got
there's
places
people
like
who want to learn
Harvard,
and there's people
when you
who
got places
don't.
like Harvard and Stanford being taken over by activists that are
Yes,
staging
I mean,
walkouts.
yeah, I agree.
I mean, just sit down and learn the fucking shit.
I
Learn
agree
math,
with you
learn
there.
science, learn history, learn your shit, and get out and do your activism somewhere else. Stay there and learn. Like, because I mean, I don't know about you guys, but I wish I would have listened more in school. I wish I would have taken even more advantage. I wish I would have done extracurricular activities. Looking back now, to have 4 years where you really don't have to worry about anything except learning. Like I'm trying to learn now in my 40s in the margins of doing the rest of the stuff in my life, just researching on YouTube or reading articles to get smarter. And I'm paying for it by losing sleep when I had 4 years of my life. That's literally all I had to do. If you are in school right now, if there's anybody in school right now, really take advantage of the time that you have right now. I just can't say that enough.
FYI,
I
me
agree
and
with you,
Vitaly
Carlos,
actually went.
100%.
Me and Vitaly actually went to the same university for undergrad.
Oh,
I
a
went
bunch
to
of
Stony
degenerates coming out of that
you know.
Stony Brook.
And then no, and it's funny because literally, and this is the part that not a lot of people even know about Stony Brook. Stony Brook is probably one of the best STEM schools in the Northeast. Yet
It is.
not too many people know about it. Jim Simmons, who's like the most amazing return, what are they called? Like
66% a year for 30 years.
Fund manager. Yeah.
fund manager, right? And it's all math, by the way. He runs his entire fund based on algorithms. It's not like he looks through balance sheets on. He's got specific algorithms that they've been able to use in order to get those kinds of returns. And literally, his office is a block, like maybe like a mile away from campus. Like it's in the middle of fucking nowhere in Setauket, Long Island. But dude, there are so many great state schools that they don't charge an arm and a leg, but they still give you that quality education that sets you apart. from the rest of the world, man. So I think. By the way, send your kids to Stony Brook. I'll pay for it. All right, I don't care. Even if you're a millionaire, I'll pay for it.
To all 516
as long as it's Stony Brook. As long as it's Stony Brook. As long as it's Stony Brook.
Papa Patel is going to be paying.
No, it's funny. Me and Sam, one of my friends, I met through the podcast, and now he's on my Patreon. He actually went to Stony Brook as well. You know.
Now, Stony Brook was a great school, and I had lots of friends who, some of them didn't take education seriously. They were just drinking and partying. I took it seriously. I love learning. It was. I still love learning. So it depends on the personality who actually wants to do it.
Stony Brook is where they first did the first MRI. That's where the actual development of the
they have
MRI
a great
started.
medical program there. Yeah. And research program. Absolutely.
Yep.
And now they're even better. They have a lot of money that's been donated, and the Baldwins donate a lot of money. I don't know if you guys know them, but that's an actor, Amit, by the way.
Yeah, I know Alex, the guy who shot that person, and
the guy who shot.
You were going there. I knew you were going there.
Okay.
The only thing that sucks about Stony Brook is that it is technically, they do have on-site campuses, but it's very commuter school, and they have a really shitty football team. Like they're like Division III. The mascot is the sea wolf, which is like some fucking mythical creature. So if you go there for like sports, like I'm actually jealous of my wife. She went to UGA. Bro, the football culture there is freaking awesome, man. Like they just have such an amazing time.
Yeah.
So there's a lot more like school spirit that comes out of the traditional bigger schools. But dude, Stony Brook, if you're into research, you're into STEM, great school to go to.
All right, cool, everybody. Good pod.
All right, we got to end it there. 519 people. Here's what we're doing tomorrow night. Okay, if you don't have plans, 9 p.m. We're doing a mukbang edition of Finance Junkies. So get a plate of food, whatever you get. You can we'll do like a Twitter hashtag. You can tweet it, so you don't have to join the live stream. You can just tweet it underneath the hashtag. And we're gonna be eating, talking about life. Probably we'll talk about stocks, get into some debates, fun stuff. But really, it's gonna be a fun episode, just talking about life, what we're thankful for, dreams, ambitions, first kisses, random stuff, stories. It'll be a fun Finance Junkies Thanksgiving extravaganza with a shit ton of food. So make sure you have the food, make sure you have the beer, the drinks,
and the Media Matters lawsuit.
And the Media Matters lawsuit. We're gonna talk about that shit. We're gonna get into some
I gotta go get some
theories, political stuff, whatever we do.
Speaking of food, I'm gonna get some food in this kid. I'll see you guys later.
Okay, bye.
All right, see you guys tomorrow night, 9 p.m. Bye, everybody. Thanks for joining.